So if we start off looking at the gas market, we've seen some unplanned outages over the weekend at the UK continental shelf, which left the system quite tight over the weekend. Those outages are now reported as over, which is seeing gas flows gradually increase to the UK. In terms of Norwegian flows, over the last week or so we've seen kind of really strong Lang-led gas flows, which has been kind of atypical for the time of year. Normally, as we get into summer, gas flows reduce from Norway because demand's so much less for gas. Because we were seeing this kind of continued heightened level, there was growing speculation that we might see some kind of it continue throughout the summer, and that obviously have a really significant impact on gas prices, pushing them lower. The recent revision lower is more in line with what we expect in terms of seasonality, and it's acted as confirmation that we're probably not going to see this continued high level of Lang-led flows. To caveat though, we are still seeing really strong LNG, and over the next 2 weeks we're expected a further 6 cargoes, which is potentially going to see gas flows increase even more. Moving now on to power, it's a bit of a mixed message with terms of power. Over the immediate short term, we're expecting to see renewable generation increase as wind speeds also increase. However, we've seen a bit of a delay in the nuclear maintenance schedule. So Dungeness B22 is supposed to return on Tuesday. That's now been delayed to Saturday, which potentially has the impact of tightening supply margins over the medium term. If we look now at oil, there's obviously been a lot of news around this Canadian wildfire and how that's affected oil prices at the moment. We've seen prices gradually creep up a little bit, and that's at the moment due to around 1 million barrels capacity being taken offline. We've not seen any kind of damage to infrastructure over there. At the moment it's just linked with the evacuation, so they've obviously moved the citizens out of the areas of risk, and that subsequently meant that the oil production centres have kind of been evacuated also, and that capacity has now gone offline. So looking at short-term contracts quite close to delivery, the prices remain at a premium to the low seen earlier in the year. However, the real strong upward move that we saw over the last couple of weeks, prices have come away from the highs that we saw then and are now kind of stuck in the middle range. Going forward throughout this week, the fundamentals look really favourable, so we could see temperatures sustain at high levels, and then obviously we'll see demand decrease and potential for prices to come off a little bit. The caveat to that is that at the end of the week, temperatures are forecast to drop back down to seasonal norm, which could see a bit more demand and potentially kind of halt any downward price action. Looking at seasonal prices, it's a similar story. We're at a premium to the low seen earlier in the year, but we have come away from the recent highs. The technical picture, so looking at price trends over the seasonal prices, we have seen a short-term uptrend develop, which obviously poses a risk to those customers that have got high levels of exposure on seasonal prices further out. So at the moment we're looking at kind of a mixed message in terms of what prices could do over the immediate term. We've got, in terms of fundamentals, everything looks quite favourable, and we could see some really oversupplied gas systems during the summer, as well as really wide margins in terms of the power market. On the other side of the coin, if we look at the technical basis, we have seen short-term uptrends develop, and those are kind of mixed messages at the moment. In terms of how that should influence people's decision making, I think it would be wrong to ignore the recent price action that we've seen, and we've seen how quickly prices can change, going from historic contract lows to kind of a significant premium to those lows in the matter of a week. So those customers that don't have any cover whatsoever, it might be worth increasing hedges on this recent pullback, just to give yourself some price certainty and mitigate some of the risk going forward. However, there is definitely still potential for prices to come off going forward, so I wouldn't necessarily recommend taking all your cover. Still maintain some exposure so that if prices do continue to fall and could potentially set fresh contract lows, you're still able to capitalise on those market losses.